The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Hi, good morning, everyone. Thanks for joining me for today's webinar, where I will be covering trend reversal patterns. All right, my name is Isaac. Glad to be back. And before I really begin, I just want to know that you guys can hear me and also see my screen. So on my screen, you should be seeing Mr. Avram's face. Right, if you guys can hear and see me clearly, please drop text in the question box. Okay, I'm not getting any comments in the question box. Can you guys hear me and see me? Okay, hi Wilfred. Thanks for welcoming me back. Okay, great. All right, so before I begin, all right, for all upcoming for all upcoming webinars with regards to TA, right, you can go to XM website under Research and Education tab. There should be Forex webinars. You click on it. It should bring you to the upcoming Forex webinar. So now we are at the tail end of January. Okay, so we can have a look at February, all the upcoming webinars going forward, and also for the month of March. All right, with that, let's begin today's topic on trend reversal patterns. Okay, and likewise, if you guys have any questions throughout the course of the presentation, feel free to stop me and fire your questions away, and I'll do my best to answer you guys. All right, so for this webinar, what we will be covering will be the different types of reversal patterns. All right, what are reversal patterns? Okay, we'll be looking at the more familiar types of reversal pattern, head and shoulders. Of course, that also comes with inverse head and shoulders, double tops and double bottoms, bull and bear traps, and also triple top, triple bottoms. All right, so double top, double bottom, okay, once you know this concept, the triple top and triple bottom concept is really similar. All right, so they can be used interchangeably. All right, not an issue at all. Okay. So, what are reversal patterns? A prerequisite for any sort of reversal pattern is an existence of a prior trend. So, if you're saying that price is in a downtrend, okay, you see something of a double bottom forming, right? Now, this double bottom is only valid, okay, when there is a downtrend, okay, when there's a downtrend. So if it breaks and goes, this is a valid double bottom. If price is moving something like that, goes down a bit, and then you see something like a double bottom, okay, this is not a valid double bottom. All right, even if price does something like that, this is not a valid double bottom. This entire thing, because of a lack of a prior existing trend, this entire thing can be considered as a market sideways structure. All right, and the same thing is true for the opposite direction, right? There needs to be an existence of a prior trend before it goes into a reversal pattern, all right? Then we can consider this as a double top. Okay? So reversal patterns, okay, indicate that an important reversal in trend is taking place. Now over here on the slides, it says trading volume plays an important role in confirming these price patterns. But I just want to point out that trading volume only should be taken into consideration when you are trading stocks. Okay, it should only be considered when you're trading stocks. If you are looking at FX, okay, it really doesn't matter because the volume from FX comes from the broker rather than from a centralized marketplace. So what are some of the common reversal patterns? Okay, the most common trend reversal patterns are head and shoulders, double tops and bottoms, okay, and triple tops and bottoms. Again, like I said, right, these two are used interchangeably. Okay. Any questions so far about the definition and how to first and foremost identify reversal patterns? Okay, if no questions, I will move on. So let's first take a look at head and shoulders top. All right, so it's a proper head and shoulders. Okay, so a head and shoulders consists of a rally to a new high, right, with a slightly lower volume. Okay, and then you need a break below the uptrend line. All right, and when then after a break below uptrend line, there's what we call a breakout, a pullback and retest of this trend line. Okay, and this should be accompanied with a lower volume, all right, to form the right shoulder. Okay, so you join the two lows, okay, the two valleys, all right, you will form the neckline. Okay, and the reversal, the head and shoulders pattern is confirmed, okay, when there is a close below the neckline with increased volume. Okay, so all right, this is really how a head and shoulders pattern is formed. All right, normally I would say that the left shoulder, let me just change the color of this. Okay, the left shoulder and the right shoulder should be somewhat of the same distance. Okay, somewhat of the same distance. Now imagine you have a person, okay, and his left shoulder is very broad, and then his right shoulder is very small. Okay, this doesn't make sense at all, right? You want a person to have relatively symmetrical left shoulder and right shoulder. That's why it's called a head and shoulders pattern. Okay. Also, at the same time, do note that the head and shoulders pattern, the right shoulder, okay, the right shoulder generally, it doesn't happen all the time, but generally the right shoulder should be higher than the left shoulder. Okay, it should be a bit higher, right? So it should be a bit higher than the left shoulder. Sorry, let me just. Okay, it should be a bit higher than the left shoulder. Okay, so these are just some things to take note of. Okay, so in FX, I would say there is no volume to take into consideration. So what is very important is there needs to be the existence of a very strong prior trend. All right, I will show you guys some examples later in the charts itself. All right, so I'm just going to move through this. Any question with regards to head and shoulders pattern? Okay, so the opposite is true for the inverse head and shoulders. All right, on the slides it says head and shoulders bottom, right? But the actual name, okay, the actual name that's commonly used is called the inverse head and shoulders. So it's the same thing. You still need a prior existence of a strong downtrend, all right, and then it forms the left shoulder, a break of the downtrend line, okay, and then a pullback and a retest, all right, you'll get the right shoulder, okay, and then a close above, you connect the two peaks, right, you connect the two peaks, you get the neckline. A close above the neckline confirms a inverse head and shoulders pattern, all right. Okay, so that is how you get the inverse head and shoulders pattern, yeah. Okay, so again, I want to point out, so on the head and shoulders, the normal head and shoulders pattern, the right shoulder is higher than the left shoulder. On the inverse head and shoulders pattern, it's the same thing as well. The left shoulder, okay, and the right shoulder, we see that the right shoulder is higher, slightly higher than the left shoulder. Okay, so the right shoulder should always be higher than the left shoulder, generally speaking. All right, now, how do we do the take profit target of a head and shoulders pattern? You need to take the distance of from the head, okay, the highest point, all the way to the neckline. You just draw one straight line down to the neckline. It doesn't matter whether a neckline is sloping downwards, sloping upwards, or horizontal, okay. You just take from the head to the neckline, just one straight line, and you project it from the point of breakout. Okay, you project it from the point of breakout. Okay, it should be the same distance. Okay, it should be the same distance. All right, so that is the TP, okay, the take profit target for the head and shoulders pattern. All right, so I hope that's clear for all of you. Any questions on the inverse head and shoulders pattern? Should be quite straightforward. All right, trend reversal patterns are really I would say that trend reversal patterns may seem very simple, okay, but I assure you that it is very important, especially in finding when you combine trend reversal patterns with multiple time frame. All right, I'll show you guys later. It actually gives you a clue to be able to catch market tops, market bottoms. All right, I know people always say that it's impossible to catch market top, market bottoms. I agree, but it is I wouldn't say it's completely impossible. I would say it is very, very difficult, but it can be done. All right. So let's move on to a double top, double bottom pattern. So the same thing is true for double top and double bottom. Again, because these are trend reversals, you need the existence of a strong prior trend, right? So here we have a double top. There's a strong uptrend, okay, and then price makes the same high, right? It makes the same high twice, like the name implies, double top, okay. Now you just have to wait for a close below the neckline, okay. A close below the neckline confirms the double top pattern. Okay, so on the slides it says here, increased volume at breakout level acts as confirmation for reversal. This applies again to stocks, all right? Equities, not so much. Okay, so to find the take profit target of the double top, all right, all you have to do is from the highest point, to the lowest point, all right, you take the distance and you project it, okay? You draw the same distance from the point of breakout, okay? And that is your take profit target. All right, very straightforward, very simple. All right, especially when we do this for day trading, right? Doing this on the intraday charts. It's very straightforward, very clean, very simple. Okay, the double bottom pattern is just the complete opposite of the double top pattern, right? You need a strong existence of a preceding downtrend, and then you see market making the same low twice, okay? And then a break above the neckline, all right, of the double bottom, a break and a close, all right, will confirm the double bottom pattern. For stocks, again, increased volume at the breakout level acts as a confirmation for the reversal. All right, and the take profit target is the same. You take from the low to the peak of the double bottom pattern, and then you project it one time from the point of breakout, and you should get the take profit target. Okay, I hope this is clear for all of you. Right, it's very, very straightforward. Double top, double bottom. Any questions at all? Okay, for those of you who are into harmonics, right, this double top, double bottom pattern, okay, let me just get a blank screen now. This double top, double bottom pattern, okay, can be seen as a M and a possible W, right? So the harmonics, for those of you who follow harmonics trading quite closely, all right, there's all these different bad pattern, all right, that is in some way or another some sort of double top, okay, quite close, okay, relatively close, still a break below the neckline, all right, should see a short. The same thing is true for double bottom, okay. It doesn't have to be strictly the same level, right? It doesn't have to be, okay. It can be just slightly off, right? Still considered a double bottom pattern. A break above the neckline, retest, and we go higher. All right, it's a reversal. All right, so yeah, like Richard, like you said, the bad pattern, especially in harmonics. All right. So MW, bad pattern, all this, if you just want to look at it from a price action point of view, from a chart pattern point of view, it's really basically double top, double bottom. It depends on which time frame you're looking at it from. All right. Okay, so now we go to something a bit more complicated, right? A fanciful name is bull trap, okay, or bear trap. At the end of the day, is just a term under this group of price action that is called a fake out. All right, so what is a bear trap? What is a bull trap? A bull trap is a pattern where prices break above the last top, generating a bullish signal. All right, it seems like it's making a higher high. Okay, however, there is no clear signal, and seems like all of a sudden, okay, it just reversed. All right, and it traps all the buyers who actually entered over here. So imagine you see price just peak above the last high, and you're just like, I think this is if you're very strict with your parameters, right, you'll be like, okay, this is not a double top, okay, even though there's a strong preceding trend, this is not a double top because price is already above the previous high, has formed a higher high, right? So what I'm gonna do is I'm gonna go long, okay, but almost immediately what happens, price pulls back lower and you are already negative. Okay, so you're considered caught in a bull trap. All right, so it reverses and traps buyers who acted on a signal. All right, and a break below the last bottom confirms the bull trap formation. Okay, so very simple way to avoid this. Okay, very simple way to avoid this is when price is in an upwards trend. Okay, you have low, okay, high, higher low, higher high, higher low, higher high, higher low, higher high, okay, to confirm that this is not a bull trap, okay, you need to have another higher low. All right, but if you don't have a higher low and you see price comes back down to form the same low, you don't have to wait for a lower low. The moment you see price forms the same low, you know for sure that this is not bullish anymore. So don't ever just blindly enter, okay, the moment a candle breaks above, right? What I really like to do is when there's a strong uptrend, okay, right? I like to wait for, and then this is the high. I like to wait for price to break out, okay, and then make a retest, all right, and then it shows a rejection of the level. All right, once there's a rejection of the level, then I'm confident I can go long. All right, it's never a immediate entry kind of thing. Okay, so it's just a tip for you guys to protect yourself from being caught in a bull trap. Okay, so over here, in the slides, it says the same target measuring techniques apply. Basically, you take the high, okay, to the lowest point, and then you project it one time from the point of breakout. All right, and there you have the take profit target of the bull trap. Any questions on the bull trap? Okay, no questions. Let's move on to the bear trap. So the bear trap is really just the opposite of the bull trap, right? The bear trap is a pattern where prices break below the last bottom, generating a bearish signal. So same thing, okay? People think that price has already formed a lower low, okay? So they think that, okay, we are in a downtrend. All right, but then price immediately, almost immediately reverses, trapping the sellers, all right? And then it breaks out to the upside, okay? Forming what we call the bear trap. All right, so the same rules apply to protect yourself from a bull trap is to look at how market moves in a downtrend. Okay, you have let me just change the color again. You have a low, you have a high, you have a lower low, you have a lower high. Sorry, you have a lower high, you have a lower low, you have a lower high. Now you have a lower low. What do you need to do? The market needs to make a lower high, okay, and reverse down to confirm that this is not a bear trap, right? But what happens? Now the market makes the same high as the previous one. So you know for sure that this is a bear trap, okay? So there's no reason for you guys to go short, okay? So don't immediately jump into the trade. Always wait and let the market make a bit of a structure first. Okay, so the take profit target, the way to measure the take profit is exactly the same as the double top, double bottom, head and shoulders pattern, and the bull trap. All right, you take from the lowest point to the highest point, okay, and then you project it one times from the point of breakout. Okay, any question on the bull trap and bear trap? All right, so this is pretty straightforward. I don't think you guys will have any issues with that. So let's continue very quickly. Okay, so we can save more time to go and identify and backtest some of these patterns in the charts. Okay, so let's look at the triple top. I'm going to breeze through this because really the triple top, triple bottom is just an extension of the double top, double bottom. Okay, not much of a difference. All right. So in a triple top formation, the market creates three tops around the same level, okay? And then a break below the last bottom confirms the triple top formation. I don't like to use the word a break below. I like to say a break and a close. Okay, a close will be a stronger indication that most likely there is a confirmation of the pattern. Okay, so increased volume and the breakout against this volume factor only applies to stocks. And the way we find the take profit target of the triple top, triple bottom is exactly the same way we do for the double top, double bottom. From high to low, project it one time from the point of breakout. Okay, so triple bottom, exactly the same. Again, I need to reiterate this point that all these are trend reversal patterns, which mean that for them to be valid, we need a strong existence of a trend that's leading into the pattern. Okay, let me just fast forward this, save you guys the time. Take profit target exactly the same way. Okay, now there's a bit of a rare one here. Okay, diamond reversal pattern. It is not actually a very common pattern. All right, I have a feeling they just putting this into the slides to just give a bit more value add. Okay, so a diamond reversal pattern, it is not a very common pattern. All right, think of it as two symmetrical triangles, one broadening and one normal symmetrical triangle. Okay, so there's a pre-existing uptrend. All right, and then you see there's a broadening triangle. Okay, and then from the broadening triangle, it goes into a symmetrical triangle. All right, and then it breaks out to the downside. Okay, showing a diamond reversal. Now, diamond reversals generally happen more in stocks than and in equities than in FX. Okay, so this is just something for you guys to take note of. Okay, it's very rare to see diamond reversals and island reversals in FX. All right, it's very common to see them in stocks. Okay, because stocks usually has more gaps and all of that. All right, and stocks also, you normally have very nice levels of fair value where the market thinks that a certain level is of fair value, and then the stock tends to trade along that level. All right, so the opposite is true. The diamond reversal is just called diamond top and a diamond bottom, same thing. Okay, now the only difference is how do we project, okay, the take profit of the diamond top and diamond reversal. Okay, over here it says that, oh, you take the move starting from when the move really starts into the diamond formation, and then you project it at a point of breakout. All right, I disagree with that because it's very subjective where the move really starts. All right, one way of getting a sure target is you take the high of the diamond and then you take the low. Okay, so you draw the apex, okay, and see where the lines converge, and then you take the height of the diamond, okay, the highest point to the lowest point of the diamond, and you project it one time, okay, from the point of breakout. Okay, project it one time from the point of breakout. You should get the take profit target of the diamond pattern. All right, it's just something for you guys to note. Okay, over here we also have another kind of pattern, all right, which is called the rounding pattern. So this develops in a market where there's a lot of two ways. Either there's very low liquidity, so the trades do not happen really very often, okay, and people are just trading around a zone. Another reason for this happening is that the market is really way too liquid, and buyers and sellers think that the fair value of the price, the fair value of the asset is really around that zone. Okay, so a long term that develops at a market peak, right? You see prices go higher, and then volume dries up at the time that price is reaching the high. So that's why it goes into this sideways mode. And then after that, towards the end of the pattern, okay, or we call it exhaustion. If you learn, if you trade along with Richard Wyckoff's method, then you'll know that this is the accumulation period. Okay, and after the accumulation period is done, all right, there is capitulation, right, where prices just fall very quickly, and the bearish momentum builds up. All right, so it's called a rounding top because really prices moves up quite slowly, very smoothly, slowly but steadily, and then after as volume dries up, it sort of trades sideways. All right, and then suddenly it just pukes. All right, so that is a rounding top pattern. Okay, some people like to call it a cup and handle also because this is the inverse cup and handle because you have the cup, and then after you have something like that, the handle, right? You have the handle. So if you think of this as a cup and handle kind of thing. Okay, the opposite is the opposite is true. Okay, they call this the saucer pattern, but it's also called the rounding bottom pattern. All right, so it's exactly the opposite. All right, it's exactly the opposite of the rounding top. All right, any questions for rounding top, rounding bottom pattern? Okay, if no questions, then we have come to the end of the slides, which I think now will be a good time to go into the show you guys the charts. Okay, identify the patterns, back test it, and show how the patterns really work out. All right, so I'm going to go into a live charts now. I have a good 20 minutes, so I will do just that. Give me a moment to pull out my charts. Okay, so I want to show you guys something. How do I get rid of this pen? Okay, so what I have here, all right, is the S&P. Okay, so on the S&P, all right, on the monthly, it seems like price is making a new high, right? So unless you guys are long-term investors and buying into ETF funds or index funds, right, you will probably try to trade the S&P E-minis, okay, which is the E-mini futures. All right, so on the monthly, it seems like it's made a new high, but if you go down to a lower time frame on the weekly, all right, you cannot see in candlestick. That's why you look at the way I do analysis. Sometimes I toggle between closing prices and candlestick because it helps me see pattern clearer. All right, so we actually have a double top pattern. All right, on the weekly, right? If you look at the line chart, there is a double top pattern being formed, and since we are already more than halfway done into the week, right? You look at candlestick, we actually have a bearish engulfing candle, right? So this is going to tell you that there should be a pullback coming soon on the S&P, right? Because double top, okay, or a possible double top and a bearish engulfing. Now let's go on to the daily. So on the daily, it's a bit harder to see. We cannot really see anything, right? Price just seems to be drifting higher. All right, in line chart, okay, in line chart, you don't really see much. All right, but I just want to point out to you guys that, remember, on the weekly, we draw a line first, okay? We can say this is the high, right? On the daily, nothing much to see, but if you go down to the 4 hour and the 1 hour, all right, it's a lot clearer. Okay, on the 4 hour, change to a line chart, a double top pattern has been confirmed, right? A double top pattern has been confirmed. Even on the 1 hour, okay, instead of a double top pattern, look at how many touches. Okay, you can consider this as a triple top with 1 touch, 2 touch, 3 touch, right? Or you can even consider this as a sideways market kind of thing. Okay, a sideways market, because there's a range over here, right? Let me just draw the range for you. Okay, it's very nice sideways range. Now, remember what we covered in the slides earlier. There needs to be a strong preceding uptrend, all right, before you can consider it as a reversal pattern. Okay, so if you were to look at the weekly, very strong uptrend. On the daily, also a very strong uptrend. Now I'm just going to change to closing chart, and I'm just to the close chart. I'm just going to draw a trend line. All right, you see that the trend line has already been broken on the daily. Okay, so I can even tidy up the trend line a bit nicer. Okay, you can see that the trend line has already been broken, right? So if anything, right, we are going to expect to see a further drop on the S&P, right? Or rather, that is what I expect. All right, so we need to see how prices open today, right? Yesterday we already have a close below this trend line, so we want to see how prices open again. Okay, so that's it. That's for the S&P. The same thing can be applied to, okay, an example will be Aussie dollar. Okay, so Aussie dollar, right, on the monthly, again, we don't really see much. Okay, so I'm just going to go back into the past. This area will not be considered a double top. Reason why: there is no strong preceding uptrend. Okay, there's no strong preceding uptrend, right? Market sort of moves sideways and then it just causes two peaks and then it goes down, right? But this can be considered a double bottom. Why? Because price made a strong push down, made a roughly the same area. Okay, in candlestick you can see they actually tested the same level, the same low twice. All right, it broke above the neckline and then it went all the way up. All right, so let's measure the what do you call that, the profit target. Okay, this is the monthly chart, but I just want to show you guys. Okay, the profit target of this we change the double arrow. You see the price target was, the TP was actually reached. Of course, the market extended a bit higher, but almost immediately it reversed back after reaching the take profit target of the double bottom. Okay, so reversal patterns are very, very important, right? So let's look at Aussie dollar, back to where price currently is, right? It just seems to be making a new high, nothing much here. But you go down to the weekly, right? A bit hard to see. You can change to line chart. You don't really see any pattern forming, right? But you go down to the daily. Now the daily is where it gets interesting. Okay, so the daily, all right, you see price is actually making lower lows and lower highs already after a strong preceding uptrend. Okay, this is not the best example of a triple top, all right, but if you can draw a trend line, okay, you know that prices are starting to make lower highs, so there's a reversal in place already. Okay, and even then on the 4 hour, okay, on the 4 hour, look at this area here. All right, nothing, no real pattern, but you can also see many examples of a double top, right? You have a strong preceding uptrend, market goes into a double top formation. Okay, previously also strong preceding uptrend, market goes into a double top formation. Okay, and you change back a candlestick, the double top formation is really pretty nice. Okay, so this is how we actually combine the use of multi-time frame analysis together with trend reversal patterns to try to see whether the markets are really in effect reversing. All right, so I'm just going to go to gold. And let's start off with the longest time frame. Okay, I'm going to pick the top over here. All right, when gold reverse. Now, it seems like gold just made a new high. A lot of people will actually go long, right? But suddenly there was a pullback. Why? If you go down to a lower time frame, all right, you can't really see much. Okay, in candlestick, there's one bearish engulfing candle. Okay, but more than that, let's go down to the daily. Okay, on the daily, I want you to observe this area, this high. There will be some telltale signs that the market gives us that a reversal is going to happen soon. And then we go down to the 4 hour. Okay, on the 4 hour, we look at this area. All right, this is something that that people can argue as a sort of a head and shoulders pattern. All right, this area here. Okay, not the best head and shoulders pattern, but the idea behind head and shoulders is that it has to be symmetrical. All right, so there is a small left shoulder, there's a small and narrow right shoulder, and there's a head. Okay, so on the 4 hour time frame, the market was really telling you, look, I'm poised, I'm ready, that a reversal is coming soon. Okay, you cannot see it on the bigger time frame, but you can see it on the smaller time frame. Now, let's zoom into this area, okay, on the 1 hour, and let's see whether there's really any further clue that the market can give us. Now, look over here. Isn't the head and shoulders pattern even clearer now on the 1 hour? Sorry, I dropped the mic, too excited with the head and shoulders. Okay, so now I'm on the 1 hour. If it's a bit hard for you guys to see, all right, change to line chart. you can see that it's pretty symmetrical. Left shoulder, narrow, right? Right shoulder, narrow, and the head is peeking out above it. Okay, change to candlestick. All right, I know just now in the slide I said that the right shoulder should always be, not always, but generally be higher than the left shoulder. But we know that the market can and will do whatever it wants to do. Give me a moment. Mic is stuck. Okay, so this is something that the market is really telling us that, hey, we are really poised for a reversal, right? So you want to find a way to enter. Okay, you want to find a way to enter. You can actually enter the moment it breaks out below the neckline. Okay, a close below the neckline. All right, so that's how we can catch the tops and bottoms of every market. All right, it is not always 100% thing. It is not a holy grail, but by looking at a big time frame at the places where market reverses, and then you zoom in onto the smaller time frame, you can always almost catch a reversal pattern. All right, even over here, right? Example over here, this area here for gold. Okay. Now on the monthly, it looks just like one touch and then it takes off. Let's go down to a lower time frame. On the weekly, what do we see? A possible double bottom, right? I'm just going to zoom in. Okay, just going to keep zooming in until we find a pattern, a possible double bottom pattern. Okay, a bit hard to see on the weekly whether it's candlestick, but line chart, it makes it look a bit clearer. Let's go down to the daily. Okay, on the daily, what does it look like? It looks like a triple bottom this time. Right, this area, it looks like a triple bottom. Change to candlestick. Yeah, you have the triple bottom. Okay, one touch, two touch, three touch. All right, so if you want to zoom in even further, you can even go down to the 4-hour and 1-hour time frame. Okay, gonna be a bit hard to see. Okay, on the 4-hour time frame, it gives you a lot more chances. All right, there are many reversal patterns. Okay, you have a double bottom pattern over here. Very clear double bottom pattern over here. All right, you have a triple bottom pattern over here. All right, so the market actually gives you multiple clues that, hey, a big reversal is coming. More than that, also, the market also gives you multiple chances for entry, right? So you can actually enter here. If you miss this one, not to worry. When price came back down to this area, you could always enter also, especially when it formed a triple bottom pattern. All right, so now something that's interesting. Let's look at Bitcoin, right? Sorry. Okay, so Bitcoin, right? We know that Bitcoin actually crossed the 40,000 mark, right? This area here. Okay, but then suddenly there was a huge pullback. There is no way you can actually predict this huge pullback, all right? On the monthly, nothing. On the weekly, nothing as well, right? On the daily, okay, on the daily, you start to see a pattern forming. Okay, on the daily, you start to see a pattern forming. All right, but you might have to expand your area a bit more. Okay, on the daily, you see a pattern forming. What's the pattern here? It's a double top pattern, right? Price tested this level once, came close the second time, you have the neckline, right? And look at that. Okay, if I'm just going to draw from the high to the neckline, okay, and I project it one time, sorry, give me a while, I project it one time, okay, Bitcoin looks like it's going to drop further towards the 25,000 region, okay, just based off on chart reversal patterns. Okay, so you do have on the daily market already telling you that, hey, look, I formed a double top reversal pattern. There's a strong preceding uptrend, right? You go down into the 4 hours, okay, even the 4 hours, you don't need this double top pattern. You can zoom in right to the peak. Okay, the market has also told you that, hey, there is a double top pattern over here. Okay, over here we do have a double top pattern, right? Look at this. tested once, tested twice, neckline. Okay, breakout, retest, all right, and it goes down. And another opportunity to enter here again. Okay, so if I were to just throw you a chart like that on the monthly, and I'm telling you, will Bitcoin reverse here? Nobody will be able to give me the answer. But the clue is really to always toggle between the time frames, all right, and especially the lower time frame. The lower time frame will always give a clue as to why markets chooses to reverse. Okay, so it applies for Bitcoin, it applies for commodities, all right. It can also apply for stocks, example. All right, so let's look at OCBC. Okay, an example, a bank stock. Okay, let's start off with the monthly. Okay, so the monthly, we can also look at the peak over here, the top here. All right. Now, of course, you can wait for this month you can wait for May 2018 to be completed, and then they will tell you, hey, look, we have a bearish engulfing, so price is going to go lower. Yeah, that's fine. Okay, but you can actually catch this move earlier. All right. Going down to the weekly, what do you have on the weekly? You have somewhat of a double top. Not the best, okay, because there's a strong preceding uptrend, right? Price form one high, comes back down, okay, forms another high. Now this seems like a bull trap, right? Price goes and makes a new high. Now, what did I say about bull trap? To avoid a bull trap, okay, we need to see whether price makes a lower high and then goes higher, right? However, over here, price didn't make a lower high. Price actually made the same low, okay? So then we can say that, hey, this is not, okay, this is not it's not a further bullish move. It could become a double top pattern. All right. If you don't trade on the weekly time frame, you can zoom in onto a lower time frame. Okay, on the lower time frame, I just want to show you guys over here as well. Okay, a bit harder to see. Nothing much, but this is also a sort of a bull trap. Okay, and then on the 4-hour time frame. Now the 4-hour time frame is going to get really ugly. All right, you can't really see much already. All right, on the 1-hour time frame, let's see whether there's any clue on the 1-hour time frame. Yeah, okay. The 1-hour time frame, there is a double top. Right, there is a double top over here. Okay, cannot really see in candlestick, but in line chart, it really helps to identify. Okay. So this is always I mean, granted, to be fair, right now this is really hindsight. I'm pointing things out on hindsight, but the point that I'm trying to drive across right now is that by switching and toggling between all the different time frames, okay, it's always possible to find out why the market is reversing or why the market is going to reverse at that point. All right, why that is a key inflection point. Okay, in the interest of time, one more. Ryan, you're talking about silver. Okay, the silver. All right, the silver, very interesting. Look at this area here. Okay, line chart. It looks like we could be forming a double top. Right, there's a strong preceding uptrend, comes back down. Okay, and price goes up. In candlestick, it has tapped the same high twice. Okay, so it could very well be forming a double top pattern. Okay, so let me just focus on this area. Okay, and go down to the weekly. Now on the weekly, you can't really see much. All right, though the weekly did show a prior double top and a chance to enter. I'm also bearish on silver. So you also do have a descending trend line. Okay, in candlestick is 1 touch, 2 touch, 3 touch. All right, looks like it can go lower at least to the neckline of this monthly double top. Okay, on the daily, On the daily, this looks like a head and shoulders, right? Not completed yet, okay? A bit weird, okay? Not completed yet. All right, there is a left shoulder, a head, okay? The right shoulder, all right? And then you draw a neckline, all right? What I do not like about it is this price movement right now. Okay, a head and shoulders traditionally should be a break, retest, and then it goes lower. Okay, but because of this movement here, all right, not very clear. Okay, but it doesn't change the fact that on the monthly we still have an impending double top pattern. On the weekly we already have a descending trend line. Okay, now let's try to go down to, let's just look at this area, supposed head and shoulders. Let's go down to the 4 hours. Okay, on the 4 hours, it doesn't seem like much. Basically, price already made a high. Okay, there's a head and shoulder pattern over here, right? Already made the move. What we think price could do is price could, and then that could be a catalyst for a short. All right, so yeah, nothing much on the 1 hour, 4 hour time frame. It's more of the daily and the weekly. If anything, I'm bearish because of the weekly time frame, and the monthly, the fact that we have what it seems like a double top pattern forming. So if you look at this area, okay, it seems like history is also repeating itself. This area, okay, over here price moves sideways, right? Strong uptrend, and then a double top, and then after that it started going down with multiple chances to re-enter for a short. All right, now this may, in close, it may seem like a very weird double top, but in candlestick, okay, it's still relatively close enough to be considered a double top. All right, all the textbook examples of the double top having the same highs and the double bottom having the same lows, okay, those are textbook examples. All right, you don't really see that all the time in the markets. Okay, so we got to be a bit flexible there. All right, so really that's all the time that we have for today. Thanks everyone for tuning in. All right, really glad to be able to be back and share with you guys some of the key reversal patterns, how I use reversal patterns in my trading and my analysis. All right, so I wish you guys all the best. Take care, stay safe, and I will catch you guys again. Thank you.